We've got more tech earnings to discuss. So much going on. Let's start with Meta, whose shares jumped in extended trading Wednesday after the company beat estimates for revenue and profit in the second quarter. Advertising revenue rose 22% from a year earlier. And the strength of that business seems to be offsetting concerns about heavy spending on AI, which I think is necessary for them. The AI spending will be increasing, with Meta upping its expected 2024 capital expenditures to at least $37 billion. We're done with the metaverse. Now we're spending the money on AI. Meta shares did sink on AI spending news last quarter. The market seems more optimistic because they've got a really good business to get them there, I guess. There's still not a lot to show for these AI investments, and a lot of investors are worried about where the payoffs are. How long will investors wait to get a return from Meta? And I'll just go through Microsoft earnings really quickly. Microsoft they're less enthusiastic about those, which were a bit of a mixed bag. Overall sales and profit growth beat expectations in the latest quarter, but revenue for the company's cloud business rose 27%, slightly below the prior quarter. And analyst expectations, shares were down about 3% on Tuesday after the earnings report, but rebounded for the most part the next day. So talk a little bit about the two companies. Thoughts?
Yeah, there's just no denying it. Meta, their earnings were up. Their earnings per share were up 73% year on year. Their ad impressions and average price per ad both increased 10% year on year. That's incredible. The average price and the number of impressions up 10%. 3.25 billion daily active users. So 40% of the planet is on a Meta platform every day. The only thing that's giving anyone any pause, and it depends how well they're positioned, is they warned that CapEx growth for AI will grow significantly, and they've said that the amount of compute needed to train Llama 4 will likely be almost 10 times more than what was used to train Llama 3. And people are sort of, when they get a little insecure about this, they immediately go to, similar to what they did in 99 when they went to Cisco, they go to the infrastructure plays. Because if you look at the CapEx for the software layer, Microsoft, Meta, Google, and Amazon, their CapEx is up 31%, but their revenue is only up 19%, whereas the hardware layer, where you go first, NVIDIA, AMD, ARM, their CapEx is actually flat to even maybe down 8%, depending on how you calculate it, but their revenue is up 146%. So it feels like a safer play right now, because since reporting their earnings, Microsoft and Google, the software stack or part of the stack, have declined 2% and 6% respectively. When AMD reported, it was up 8%, but the software layer, is that true? Meta was up, but Microsoft was down. But the thing that freaked everybody out on the Microsoft call was I think it was like they announced something like a 78% year-on-year increase in CapEx to $19 billion, which is a staggering increase. And get this, the entire tech industry is in such a spending spree. The capital expenditures of Amazon, Meta, Microsoft, and Google this year will be about $200 billion. That's double what the U.S. government spends on homeland security. These numbers are just staggering.
They are. They're staggering. Whether they're going to get the money back is a real question. I think pretty much OpenAI is making money, but who else is? This irritating VC, I'm not even going to name him, was asking. I was having lunch with Sam Altman, was asking, is anyone going to make money here, essentially? And I think everyone's worried about that. Is this spending going to result in, growth that meets the amount of money they're spending? I don't see they have another choice but to spend, correct? This is not the metaverse. This is a really critical shift in computing. I don't know how they can't not invest.
This is, all systems are go here. This is as much excitement as there was about the web, even though the revenue is scant relative to the investment, it's dramatically greater than the revenue anyone was getting from the web in the 90s. So everybody is going all in. And also it plays to their strength in the sense that they already have a captive audience to roll out AI applications to. And also they've learned from the father that if you have the advantage of cheap capital, you leverage that advantage and you go hard at CapEx to try and pull away from everybody else. So they're doing that. They're like, look, our advantage is we have access to cheaper capital because of our market cap and our PE. So we are going to turn on the spending jets. Here's a fun stat. 40% of S&P 500 companies discussed AI in their earnings calls. What is it? Only like 20% are tech companies. So even non-tech companies are talking about AI in their earnings calls. That's up from 1% of them 5 years ago. So this is a tidal wave that is just this is the tail wagging all dogs.
So money well spent, or we don't know yet, or impossible not to spend?
I think it's money very well spent for some players. Unfortunately, existing players who are running away with it. I do think there's a jump on the bandwagon. I don't think. I think a lot of analysts are going to say, and I don't know if Nestle's doing this, but I think a lot of analysts are going to say to some of these second tier or consumer companies, okay, rent AI, spend money on it, but you shouldn't be spending CapEx on it. Because I've heard about some companies are trying to develop their own LLMs and going very hard at this. But the stat I've seen that just absolutely blew me away, we tried to pull together some data on this, is that if you look at the actual amount of revenue that AI applications are generating right now, OpenAI or ChatGPT, the subscription, things like that, it's about $20 billion. And it's inspired a market capitalization increase. And this includes the amount of money that companies are spending on GPUs. But it's inspired a $3 trillion increase in market capitalization. So right now, the industry notionally is trading at 150 times revenues. And that just does not feel sustainable. That means the revenues these applications are garnering has to, double every year for the foreseeable future, which is that's a big ask.
I don't see how they avoid these spends. I just don't see how they avoid them.
Yeah, it's an arms race. They have to do it.
It's an arms race.